Welcome to the DJE podcast, where you will learn about real estate investing from real-life examples. Here's your host, Devin Elder.
Hey guys, welcome. We're going to jump right in. I'm very excited. My guest today is David Thompson. He's the president of Thompson Investing out of Austin, Texas, and they have a ton of experience with a couple of different commercial niches. David came out of the corporate world in tech a number of years ago and has been really just kind of on fire the last couple of years. I've been following him as he's participated in a number of syndication deals, whether it's on the capital side or on the syndication side, asset management, all these kind of things. Thompson Capital, I believe, is up to over 4,000 units. I'll let Dave talk about it a little more, but lots to dive into. David, welcome, and thanks for coming on the podcast today. How are you?
Hey, Devin. Nice to have you here. I appreciate it. Thanks so much. Always nice to talk to you. I know you're close by in San Antonio, and we do talk often. So I'm excited about you getting these podcasts going, and appreciate you having me on. Yeah.
Yeah, absolutely. I know we try to make an in-person work. In person would have been cool. We're only 70 miles up the highway from each other, but this is definitely good too. So good to connect, man.
Sure. Absolutely. Thank you.
So there's lots I want to talk to you about, lots I want to get into on the commercial real estate investing space. But for folks that maybe haven't come across Thompson Investing before, I know you guys are everywhere online, but for the uninitiated, what's the background on Dave Thompson?
Sure. So I spent a lot of years in high tech. I left the world of high tech in about 2015. I had started my real estate experiences really focused on that as a kind of a passive income builder, like a lot of folks, with some single family here in Austin, Texas, where we're located. And we developed, we purchased several of those properties, and then it got to a point where I think a lot of people have that same inflection point. Hey, do I keep going here? I need to have my W-2 job. I need to get that loan. I need to get, and I was coming to the end of my career. I had done high tech for about 20 years, great opportunities there, learned met some great people, traveled all over the world. But my kids were getting a little older. I had one in college, one in high school, and I was thinking, they're a little bit more independent now. I can really go see what this entrepreneurial world's all about. I was really ready to leave and do something different. And I ran across an article on Bigger Pockets around syndication, and I just started thinking more about that I didn't have to have that job anymore. I can go find some capital. I can go find some deals. And that's really how I got into the bigger world of commercial real estate. And that happened around 2015, late 2015. I started working for a syndicator, just multifamily apartments in Dallas, Texas. And I was starting to he had a mentoring program. I was just trying to learn about what this whole business is about. And maybe about 3 months into the program, I just said, hey, I think it's more of a team sport, and I could go out, certainly get some folks and try to do this thing, but they're going to ask about my experiences, and which I had nothing in commercial experience at that point. I had a lot of business and real estate, single family experience, but I just found that it was getting more competitive at that point in the market, and you need to be selective, you need to do due diligence and all that. I'm like, why don't I just asked this the person who was mentoring me, and I just asked him one day how I could help him. That guy was Joe Fairless. I was asking Joe. I said, what can I do for you? They had happened to have a 320 unit apartment in Dallas that I was hearing in the background. I said, what can I do for you? He goes, well, I tell you what, you're going to learn a lot by working with us. How about you go talk to investors, educate them on our deal? That's a good market. I'll talk to you about, I've already gone through his 3 months of his program, so I knew what underwriting was like and what are good assumptions and safe assumptions. And so I just started talking to people I knew in my network, and I found out I was just really comfortable with that. And some people may not be, but and if you told me it was sales or marketing, I probably would have shied away from it, Devin, because it was an area of experience in my early days I didn't really like too much. And it was the old days of cold calling and stuff like that. And Joe's approach was just totally different than that. It was all about this thing called thought leadership, which you're doing with podcasting, or you've got a blog, which I migrated to. And I just started getting into it. I raised $1 million in my first deal with him in 2 weeks.
That's great. Wow.
And he looked at me and I looked at him like, I didn't have any reference point. I thought it went pretty well. He goes, wow, that's great. He says, and then we had another deal. I've done now 14 deals with that group, and primarily I've gotten a lot more involved in several different roles on the program, but primarily I'm involved with the investors, and so I'm growing an investor base educating them on their deals and staying really close to that team. But over time, what ended up happening, Devin, just like anything, your investors ask, hey, what else you got?
Yep,
what else
right.
do you have besides Dallas, Texas, and Ashcroft Capital, which is the group I was working with, and Joe and all that. And I was like, hey, we'll keep doing deals with these guys. They really know what they're doing. But, I'm really big. I had a degree in financial planning. So I always had this diversification mindset. So when I talked to investors, I thought, as I read more and studied the industry a little bit more, is that, operator diversification, geographic diversification, and niche diversification. So I started looking at what are some of the top performing niches over the last 25 years, and it's been multifamily, value add, it's been self-storage, it's been manufactured home parks. So I'm like, well, I can go do other things, but why don't I just focus on adding those niches? So I just added those layers over time, and grown a larger investor base. And we've got all those boxes checked now, and we're continuing. We do sponsor our own deals. We've now migrated over to sponsoring some of our own deals. We do
Excellent.
team up with operators. We find, Devin, that there's institutional operators out there, especially we like that. May have a $500,000 minimum, or are doing something really cool, but it's not a right entry point for our members who are maybe 50,000 entry points. So
Sure.
If we sponsor those deals, we can give them access to some really experienced operators who've been in this 10 plus years, and so we have a little bit of that going on. And so it's been like a little over 3 years since I started the business, but I'm having more fun. I'm just having a lot of fun. I've got a team growing here as well that I mentor and coach on, and it's a fabulous business, as you know. It's a lot of work, but if you love what you're doing, you hear it many times. I do love what I'm doing, and as a result, I don't feel like I'm really working.
Yeah,
right? Everybody has those days, have those days, but it's like most of the time I just really love it, and my wife has to tell me to turn it off.
It's a far cry from the corporate world too, I'm sure, right?
It is. The thing that you always talk about and listen to when you're interviewing entrepreneurs, they're working hard and they love what they're doing. But what you find is they don't really talk maybe about the lifestyle, right? So the lifestyle is, first of all, this business that I'm engaged in, I can take my computer, I can do this anywhere in the world. I was in China and Japan over the holidays and clearly didn't want to be connected to the computer, but it was 18 days. I'm like, I need to check in. We had some deals that were kind of overlapping, closing or opening up a little bit.
Sure.
And so, I know I can be anywhere in the world. There's some connection problems and, but outside of that, I'm like, I think I could be pretty much anywhere. I can tell people, hey, for a couple, I can take it, I can shut it down. I have a lot of flexibility to spend time with my family. I never miss a kid event. We were down and we had a robotics meet in New Braunfels this last week, and I was like, let's just go, and so we can do a lot of things that I think some folks who are in the corporate world, you can't take vacations forever. You can't travel forever. You could, but I think with this business, you could spend a lot more time outside and doing what you want to do, and that's the beauty of it.
Yeah, I kind of want to reiterate that the ability that you don't miss any kids events. That was one of the big drivers for me getting out of the corporate world a number of years ago myself. And look, same thing for me. We've got a lot of work going on, lots of different plates spinning, a lot of work to do, but it really is kind of on my own terms, and the ability to say, hey, we're not going to miss dinner, we're not going to miss vacation, whatever. It's completely night and day. And funny thing is, you adjust to it relatively rapidly. Like, this is the new reality. You get used to it. That's fine. But it's such a huge advantage to be in this business, to be an entrepreneur, to have that flexibility. So kudos to you to be able to
it's great. I'll add one more point too. I think is really important. And one of my monikers is, for our investors, we want to give you opportunities to create a passive income. So where, basically you can live life on your terms. And I feel that, in the corporate world, although they're working with great people, you have to go to meetings that were, meetings you're like, sometimes you'll sit back like, why are we having this meeting? Or you have to meet with people just because you have to meet with people, or you have to go through these, you're, as a manager, you'd have to go through these cycles, these HR cycles. And you just do that over and over again. After a while, you feel like, you're not in control. You just have to do these things. And so as an entrepreneur, I literally, like if I have meetings with people in Austin, Texas, we have some, traffic woes as the city grows, just like San Antonio.
No doubt.
I tell everybody at 10 or 2. I'll meet you at 10 or 2, for coffee or, if I'm doing a face-to-face meeting, and then, so I just work my schedule around what I want to. it, I do have meetings with people I want to have meetings with. I'm not
Right.
really, I don't go to too many things I don't want to go to. And I love that flexibility. That's
Oh,
another
yeah,
thing that was really great.
priceless. Yeah,
Yeah.
priceless.
Yeah.
Let's talk a little bit. I definitely want to spend some time on some of the niches that you're in, but let's talk a little bit about capital raising. I mean, you were able to dive,
Mm-hmm.
sounds like kind of right in and have some substantial success
Yeah.
raising capital. And I mean, the firm's
Yeah.
really exploded over the last couple of years. And I know you also coach folks kind of through
Mm-hmm.
that process, because there's this
Sure.
whole world of opportunity available that, I mean, you were a financial planner. Folks are kind of brainwashed to give your money to the market, don't ask
Yeah.
questions, and
Yeah.
hold on for the long term, which is,
Yeah.
I mean, just kind of ludicrous in some ways. But you coach folks through raising capital. You raise a lot of capital. What are your thoughts on, some of the things that have helped you and Thompson Investing be successful in that?
Yeah, well, I could go on and on, but I'll try to keep it, succinct at this point, because I do get asked a lot of questions around that, and I'd love to speak about it. I got out of college, and the first job I had, I was a financial planning degree. I'm thinking I'm going to be a financial planner, and just probably like a lot of 18-year-olds, or at that point, or when you get out of college, I think I was 21, but you don't really probably do a lot of research about the industry as much as the kids do are taught to today. It's just like, hey, jobs were seen plentiful, but it was essentially, there was no like company hiring for financial planners.
Right.
It was truly an entrepreneurial job. And here I am, like 21 years old, and talking to people about, and the only way that I could make any money at it was through an insurance company that basically would give you a draw. And they basically said, well, go cold call and go talk to people about selling whole life insurance and disability insurance.
Right.
Now, as a planner, that's all important. And I'm not laughing because of that, but I was like really more on the investment side. I really liked that kind of side. It was a little sexier to me. Hang on one sec. It was a little sexier to me. So essentially what ended up happening was I did it about 6 months. I hired a whole cold calling company. I was like, this is terrible. Well, for 20 years, I did the corporate thing. I went and got my master's. I said, I'm not an entrepreneur. I'm not cut out for this. If this is what it's all about, this is not what I want to be doing. So I deviated for 20 years, but I always had this passion on the side about doing investing and everything. And so when I left the corporate world, and I got talking to my mentor, and he never talked to me about this was like a sales and marketing. And to this day, it's never sales. It's not.
Right.
If you're selling a deal, you're doing it wrong. Okay.
I 100% agree. Yeah. If you've got to talk somebody into this,
right, it's totally wrong. So what
Yeah.
I want to tell your audience, if you're thinking about raising capital, or is this an opportunity for you, or as part of it being a syndicator or whatever, that's one of your roles, is don't worry about that. If you've had not a good experience around that, it's never really taught right. It's not. First of all, you don't do that business. That's not how you do the business. Okay. So. Right. So what basically I tell people is a couple things. One, I think when this is definitely important. If you're starting out, don't start out capital raising for your own deal. I think people try to do that, or hey, I got a deal. They take a course. I'm going to go multifamily or whatever, and then they turn around to their friend, their brother-in-law, someone they know that's close by, and say, hey, would you want to? They don't think about what their skill set is, and trying to find a partner that would complement them, but really good at this one. They just go. And I think
Right.
a lot of people start like that, and they don't have any success because they turned around to an investor and they're like, where's your experience? What have you done?
Right.
And the lenders are going, what have you done? The broker's going, what have you done? And you don't have a track record. So I said, why do you swim upstream? Why do that? And so when I started, the key to my success, one of the most important things I tell everybody is really partner with people who have experience, successful people. And so when I started working with Ashcroft Capital, the lead guy had like 10 years experience doing this. And then Joe had been out in front of me doing it for a while. And so that's really critical. The second thing is those people who are experienced, they're usually in a good market. They're usually looking at 50 deals. And by the time you're working on a deal with them and helping them, it's a good deal. It's a
Right.
good deal. They already have their broker relationships. They know what they're doing. And so you're working with a team that's already successful. If you can figure out a way to do that, they're out there, and just ask people how you can help. And, whatever it is, even if you're not getting paid, I wasn't looking to get paid out of this really out of the gate. It came with a really nice compensation program, but it wasn't what I was looking for. I was just wanting experience. so that I could build a resume. And then when I want to do my own thing at some point. So that's the first thing. And there's the second thing, which I think is that, really these are the two key points. The second thing is, I tell people is that, and this is an interesting story. So if you think about raising capital, developing a thought leadership platform is the holy grail of capital raising. And what does that mean? Well, you are out there, Devin, like yourself, starting a podcast, or I've seen you do videos. And for myself, it was blogging. But you research, through experiences and research and talking to people, you can develop content to share to other people who are trying to learn about the business or just want to, develop their skill sets. And that with social media, all that. So you'd be surprised in the beginning when I started, Joe just said, pick one of those things. Pick one, be consistent, and just keep doing it. So I wasn't doing it big hard time. I did blogging. I picked blogging. I don't know why. I didn't even think I was a writer. I just I don't know. I can blog. So I started doing it twice a week or twice a month, which wasn't crazy. I'm only doing it once a month now. And I need to get back to it. But I always said I'm never going to pass a month without one blog.
Right.
And I've got like 50 blogs now on my website. And there's a group called Bigger Pockets, a social real estate network that I post my blogs to. And I saw the other day, they have a metric, an analytical number. It said, hey, you've got 13,000 people have reviewed your blogs. 13,000. Wow. I'm like, holy smokes. And, I'm not a fancy writer. I never went to a writing class. I don't think I have anything special technique. I'm just speaking authentically about what I know. And I think that's the thing I learned more about experts who are good at thought leadership. You're consistent. You pick one thing that you really like to do, and then you're authentic, and you're really helping your reader learn. And so if you, that's how I got started. I got a lot of leads from people just coming to my website. And people who come to my website, it's because, hey, I read a blog somewhere. They stay in outer space, cyberspace. They're out there, right? And they just stay. They stay out there, and people come across them. And the other day, it was funny. I just put something in, and up come my company name, and then I saw these blogs, and I'm like, wow. I wasn't purposely searching for them. It just, I hit a couple words that were similar to what I was writing about. And my blogs were up there. I'm like, wow, if people are searching syndication, they'll see a blog, they'll read, and then they're like, this guy's, what he's talking about resonates with me.
Right.
And that's how people always come to me. They come, well, hey, you were kind of speaking to me, or this is exactly what I was thinking. My beliefs are spot on how you think about this niche or why. And so it's huge. So those are the two things. Partner with experts. Obviously, there's all sorts of other techniques around it, but those would be the two things. Ended up writing a book, Devin.
Outstanding.
My mentor said, hey, I did a podcast with a guy named Kevin Bupp a couple years ago. It was my first podcast interview I'd done right after or 3 years ago, right after I raised the 1 million. I thought it was kind of a cool thing. Hey, raise 1 million in 2 weeks. That sounds like a book. And I wasn't even sure what Joe was talking about, but he said to me, he says, you've got go to Upworks and get that transcripted. And it came out like 29 pages of words because it was a 2-hour interview. We had to break it up over 2 weeks because we really got into the 10 steps and how I capital raised. But what was funny about that was how easy it was to get a book out. And that's another thought leadership platform. I never thought about doing a book, but he says, hey, you get interviewed. Maybe it's a longer interview, or maybe you do a couple interviews on the same theme. And then you give it to, we went to Upworks, and for $100, I think this lady out in Pennsylvania, they bid on your projects. And she said, I have a software program that would take that podcast and turn it into a transcript, which is 29 pages. And I said, Joe, what's 29 pages going to do for me? He goes, no, that's really a book because it's a 5x7 with pictures and organized a little bit better. Put an epilogue on it. He goes, away you go. And sure enough, I had a friend of mine in Austin that she had a little editing book company, and she said, I'd love to work on that with you. And within a month after that interview, we had basically a pretty good, nice rough draft of the book. It's now on my website. You can download it for free, but it was like how I raised money in 2 weeks. It was my top 10 tips on raising capital. But that's an example of thought leadership. That's how fast you can get something out, because there's a lot of people out there that want to support you. Have the talents or skill sets, whether it's starting a podcast, whatever. But I would just sum it up as there's ways to get going in this business. And I'd never sold anybody. I'm telling you, it was a good market, a good deal, a good team. I developed some platform around and getting people to my website to check me out, or talking to my network to get going. 85% of my investors on every deal today, which could be 50 to 100 investors, they are return investors or referrals.
Yep.
I'm only getting 15% from my thought leadership program. Well, I'm sure there's some bleed over, but that's how I think about it. I'm thinking I'm doing these thought leadership for primarily that new folks coming in, because just like a pond, if you don't have running water coming in and going out, it's going to get stagnant. I always think about that in my mind. I always want to keep growing and doing bigger deals, more deals, sharing the ideas with people to help them understand there's a much better way than, in our opinion, the stock market, right?
No
As you
doubt.
start the whole thing with, right? There's a whole,
No doubt.
and no one knows about it. Really, it's
Right.
amazing. It's just you couldn't advertise these deals for a long time, Devin. As you know,
Mm-hmm.
we still don't advertise our deals. I know crowdfunding does. They got this provision in the Jobs Act to do that a few years ago, but I still find, I don't know how that industry is performing. I'm sure people do like it, but at the end of the day, people want to talk to someone. They
Right.
want to know who the operator are, and that's where I think our advantage is. We'll sit down and we'll have a conversation with people, really understand who they are, what's going on. And you're actually working. I'm on the operator team. I'm part of the general partnership. You're talking to me just as much as you're talking to Ashcroft. I am Ashcroft. When I'm working the deal, I mean, I'm part of the operating general partnership team, and so they get really close to what's going on.
Yeah, that's right. And I think that's one of the mechanisms that allows these deals to be so profitable is if I'm investing in something on the stock exchange, there's 1,000 hands in the pot between me and the CEO. And there's just, that's just going to not be good for me as a friend of mine describes it as being a bottom feeder, right? You're getting the absolute last scraps after everybody else has had their hand in the pot. And with the syndication, your investors are one phone call away from, from a general partner on that project. And that's huge. Not in terms of profitability of the deal and the returns, of course, we like this space for that, but also for, I can't get anybody on the phone at Apple that's got any decision-making power, right? But I can talk to Dave Thompson if I've got $50K invested in a multifamily project in Dallas. So huge advantage there.
That's a good point.
I love the point you made about partnering. I see that a lot with folks too. Hey, I want to get into multifamily investing. I've got some money set aside or whatever. I don't think people realize a lot of time at the outset the operational load that's required, whether it's broker relationships, due diligence, the skill set. I mean, there's so much that goes into taking these things over, counter to what you might hear at a boot camp where it's, there's so much that goes into it. And I think that, clearly one of the ways you've been able to grow the company so fast is to specialize, focus, and let everybody do what they're good at. So huge point there. Let's talk a little bit about some of the niches that you're in. I mean, multifamily investing, obviously, we talk about that a lot on this podcast, and you're very involved there. Outside of multifamily, what are some of the other asset classes that Thompson's got experience with? Maybe you can touch on that.
Yeah, no, good question. So after we were doing several deals in Dallas with apartments and with one operator, Ashcroft, and I was thinking to myself, what else? This growing base is saying, hey, this is great, Dave, but we've heard about geographic diversification, and maybe there's some niche diversification. I was educating them on that one way or the other, and operator diversification. So I started thinking. I started my research, and what I came up with is, over the last 25 years, if you map this out, if in the commercial real estate space, there's self-storage, mobile home parks, and apartments have been the top performers. And I was especially interested as I started looking at that a couple years back, as this economic cycle has extended quite a bit now, and we're still a healthy environment, but you have to sincerely be definitely more selective and patient to find the right deals than you were maybe in 2012, when you could just probably throw a dart and go up with everybody, like rising tide concept. So, we started looking at that, and I was like really impressed, but I looked at what I was mostly impressed with those industries is how they handle a downturn. And I don't know if you know this data point, this blows you away, but if you look at the quarterly net operating income of these asset classes going up and down, the manufactured home parks niche has never had a losing quarter. It's always grown quarter after quarter. And there's reasons for that. I mean, a typical lot, we would own the land, and then the manufactured home park owner or manufactured home owner, they own the home. So these lots are probably $300 a month, maybe on average nationwide. I mean, obviously higher in other areas. If I go in and do a value add strategy to that park, add lighting, safety lighting, redo the streets, the signage, add a landscaping package, I am doing value add. I can do value add in multifamily, manufactured home parks. I can do it in self-storage. And I looked at those industries, and I was like, wow, you can still do a lot of this value add appreciation for them. But the rent I would do, typically what you see is they raise rent 10%. You can't raise rents 10%. Maybe maybe you can in value add, but that's a big jump.
Sure.
But off $300, it's $30 more a month, and then it's 5% every year after. So in 3 or 4 years, so you've raised it 25%. It's not a huge displacement for those folks.
Right.
You're seeing something positive happening in their community. You're taking a shuffleboard court that no one used and turning it into a pickle court, which is a big thing going on in Phoenix, Arizona, where we do a lot of parks. People love pickle, which is kind of like a miniature version of tennis,
Okay.
It's a smaller court, and they have lines on Friday night, people trying to get in. So you can do things that people will pay if they see you adding value and taking care of them and concerned about them, right? So, but you can see it in all these spaces. But a couple of the reasons, if I step back and look at manufactured home parks, probably the data points that just blow me away is, number one, there's like 50,000 mobile home parks around the country. We kind of grew up with them as kids, kind of back off the street somewhere. No one really liked them, what they were. And there are some really nice parks now, but cities and municipalities across the country don't really like them. One, they have this stigma, okay?
Right.
And number two is there's a very low tax base for them, right?
Right.
Right? That's probably the number one thing.
Exactly.
So we don't encourage new parks. And I think it was like last year there was only 10 new parks. So there's a supply constraint. And what's the demand that's happening? Well, everybody hears about affordable housing. It's extremely difficult now as home prices have skyrocketed. People are turning to apartments, which is where you and I still play in that space and why it's still a wonderful area. But also, mobile home parks is still a very a proposition for a lot of folks, maybe the only opportunity that they have.
Right.
So you have this growing demand for affordability and a lack of supply. And then the last thing I love about the industry, it's very fragmented. Not so in multifamily as much, but it's very fragmented ownership. 80% is probably individual mom and pop hands in manufactured home park owners, and same for self-storage. And so if you have a company that you're working with that's operating like a company and knows how to operate these much more efficiently, knows the right value add strategies, a lot of there are some great mom and pop owners, of course, but a lot of them get inherited these parks. They're good cash flowers, but they don't even have a website, and we come in and we're like, okay, well, let's buy the property from you. They make good money on the way out, but there's still a ton of value still there. There might be 20% of lots are vacant. Well, we go out and we'll buy new ones or refurbished ones, and we'll sell them to the owner. We want to fill this park up. We don't want to own any of these things, but we want to own the land underneath them. And some of them are these parks are in really good MSAs. The cities have grown out towards them, and so the land's valuable. Sometimes you could see them, relocate and convert to some of the other better use, right?
Sure.
So that's parks. Love parks. They cash flow pretty well. I mean, maybe a little bit higher than multifamily. They tend to maybe 8 to 10% cash flow. You tend to hold on to them longer. We hold on to these things 5 or 10 years. There's not a big flipping strategy here like there is with apartments. So they're more of a long-term cash flow holder. And we refinance along the way to pull equity out instead of selling the parks. That's kind of the strategy. And real quick on self-storage, a similar thing. We find, why have they done so well in the long term? There's a couple of big reasons in self-storage. One is we're nationwide. We love things, right?
Right.
We love stuff.
Love our stuff. Yep.
We love our stuff. And in good times, we're buying more stuff than we need, and we're looking for places to store it. And in bad times, it's surprisingly, we close up businesses, small businesses. We maybe move in with our parents for a little while, but we still keep our stuff, and it goes into storage. And then there's all sorts of different uses for storage now. I mean, so, think about Class A offices, how expensive Class A offices are.
Sure.
Well, if we really we need to store stuff, and we have to physically store stuff. We don't have to have it sitting in Class A offices. if we don't have to get to it very frequently, we'll store it off site at the storage. So there's lots of different uses. You can park your RVs there. HOAs are more restricted than ever. I need to park my RV somewhere. So some of these places, self-storage, also have other ancillary income stream opportunities. They can add U-Haul. So we love that space. We're connected with an operator out of Atlanta that does a lot of value-add deals, and they can also take a property that maybe have 300 units self-storage, and they can expand it. If they have more property, they can expand it, add climate control, which is a big thing these days.
Sure.
The beautiful thing about self-storage is the cost is the turnover. There's a month-to-month lease going on. So if I needed to increase my rents, I can do it. If I have a year lease on somebody, I really can't, right? So month-to-month leases is huge in self-storage. The best thing I think I found, because I had single-family homes in Austin, is when you have a turnover, makeover. Oh gosh, it's good. My next 2 weekends, maybe 3, are going to be messy, right? I got to go over there and I got to get contractors in. I got to see what's damage. I got to get a person out, get a person in. So with storage, it's like, okay, if they don't pay, there's going to be an auction. If they just do the normal thing and I'm done with my lease, I want to move out. They move their stuff out. We sweep it and give the next person another lock. There's not a lot of painting going on. The turnovers are fast, and I think that's why people like them. And you don't have to have a big staff. I mean, a lot of these places are operating with a kiosk and maybe a manager on the weekend or something on call. And so the expense ratio of these things are quite lower than multifamily. But we like the space a lot. I mean, as any business, there's risks here and there. I think we're all seeing with self-storage. I know, like in Austin, I live off of this road called Rural Route 620. It's a very busy road in Northwest Austin, and there's like storage facilities going up everywhere. And I think there's an oversupply situation. So the thing I learned working with an operator in self-storage is the number one killer in self-storage is oversupply. And once you're oversupplied, you're just like hosed for a while, right? Until the growth comes in. So you want to be in good growth areas, and you want to make sure they do a good feasibility study. To make sure 1 mile, 3 miles, 5 miles away from this facility that you're undersupplied before you buy that thing, so you've got some running room before you go in. But we like those 3 niches or those other 2 niches quite a bit. They have very similar, tax efficiencies as a multifamily apartments.
Sure.
They cash flow in the similar ranges. Self-storage may take a little bit more lease up period, but it just gives our, Dev and our investors a chance to play in some different niches that have really good track records, and moving forward, all indications are these are still healthy markets or healthy niches, as opposed to maybe retail, which with amortization of things are it's a little dicey. Maybe office, we're kind of late in the cycle. Is this a good time to get an office deal where economy could slow down in a couple of years? We just want to be in niches that we want to protect our investor capital and get good cash flow for them, and then maybe you have a slowdown or a down cycle on the next up cycle, then maybe new construction. Hey, maybe something else that hits the target in the cycle better. But right now, these are the niches that we feel like our investors are going to be comfortable in.
Yeah, that makes a lot of sense. Great overview on self-storage and mobile home parks. Appreciate that. What I know we need to wrap up here, Dave, and I want people to be able to connect with you. But can you touch on your coaching program real quick? Maybe share that with folks.
Yeah, I had after we had success working with in the Dallas market with our apartments, I would get people that would through my thought leadership program. Not only just investors are coming to you, right? People want to come to you like, hey, I want to do what you're doing, or what's going on.
Sure.
And I would send them back to my coach, mentor. I said, he's got a full program, kind of teaches you how to find deals, manage deals, and raise capital. He had a whole thing going on. But I found that most of the people that came to me had a really good day job, even, doctors and entrepreneurs and, people who are really educated and just hard worker, really excited and passionate. I meet a lot of wonderful people in this space. I mean, it's not the person that's not looking for opportunities, but they have busy day jobs.
Sure. And
I was thinking to myself, when I left Dell, I had all day long, and I still thought it was going to be intimidating. I thought it was going to be, I wanted a team around me, or, I was like, it's still big. But imagine these people working their day jobs. They have families too, a lot of times young kids that require a lot more attention with their sports and what activities they're doing. And so I found that, listen, my role was really around capital raising. I do a lot of different things for these operators, and legally you need to do as well. But I found that's where this investor liaison role was really something that I felt I could mentor and coach some people on. So I did develop a program where, really helping you grow your own business, but learning and working with me on a sponsorship team, helping you learn how to do these kind of things, and really the steps to developing a thought leadership program, and just everything that I learned and how I was successful in the business. So I just wanted to kind of give back, and it's really helped grow our business too, because those folks help contribute to the deals that we're in. But it gives them a chance to get some real life experience in syndication without having to chuck the job and have challenges with the family. They can really kind of work this in, because if you think about what we do, I am with the investor through the life cycle of a deal. Okay, sure. But really the focus of my time and energy happens in this 4 to 6 week time frame, right, when we're raising capital with the partnership team so that we can go buy this deal. So those conversations of educating investors and qualifying them and taking them through the process to where they actually fund it, that's probably 80 or 90% of my energy around a deal. So I look at these as kind of projects, Devin, where if you have, hey Dave, I'm pretty busy, but maybe I can do a couple projects with you this year, or 2 or 3 or 4 projects. Well, we did 13 deals last year. We were very busy. So awesome. You don't have to do every deal. You can just, if there's something there, you have room and you want to learn. So that's been a lot of fun. I really enjoyed that experience, and it's really helped us get out and do more deals and things like that. So yeah, it's going on. And what else can I tell you? I think that's about it. But, I'm having a lot of fun. I'm excited what you're doing through podcasts. That's fantastic. Thanks for really having me on. And, if I could help anybody, if you don't mind, I can share you my website.
Yeah, please do. What's the best way for folks to get in touch?
Yeah. So thompsoninvesting.com. It's all one word, kind of long. THOMPSON investing.com. And then my email is david@investing.com. But if you just come to my webpage, I have a capture page if you wanted more information, kind of what we're doing. But hey, it's been fun. I appreciate the time today. I can give
David
back.
Thompson, thank you for coming on, man. Really appreciate it. Yeah. Folks, go check out thompsoninvesting.com, and we'll catch up with you soon. Thanks so much.
Devin, thanks a lot. Appreciate the time. Thank you.
We'll see you.
Bye.
Thank you for listening to the DJE podcast. For more information, please go to djetexas.com.